when President Donald Trump started talking about and implementing his tariff policies, a lot of investor attention went to Walmart and negatively as how is it going to respond to these higher costs because it imports so much of the products it sells in the United States. And when Walmart's management team was scheduled to meet with investors, we were expecting to hear a lot of negative news about how the business is going to be hurt by the rising cost of goods sold. Instead, we got a lot of optimism from Walmart's management team and its ability to respond to these macroeconomic headwinds. And I'm going to share those bit of developments with you in this video.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Walmart CEO Doug McMillon said that, look, it's not like we just started to make adjustments to our business as a result of tariffs. These started in 2016, 2017 during the first Trump administration. So Walmart's been working on mitigating these impacts for 7, 8 years now. In some cases, they said they'll absorb costs within a category or department and not simply pass on a tariff cost attribute to each item individually. Furthermore, they have suppliers shifting materials from tariff-impacted components like aluminum to fiberglass where there is no tariffs. And I think that's just one example of being able to work with suppliers to mitigate some of the impacts of tariffs. One of the things I've talked about with Walmart stock for the past 8 years that I've been following the company is its strong relationships with suppliers. That strong relationship with its suppliers is one of Walmart's strongest competitive advantages. That's why Walmart's been able to sustain its position as the low-cost leader in its category, is that relationship with suppliers. It has strong negotiating power against those suppliers. It's very much in favor of Walmart. And so they can influence their suppliers meaningfully to adjust their operations to account for these changes that are going to be implemented as a result of the higher tariffs. And that was something that was reiterated here in this statement by Walmart CEO. And so they have some room to absorb costs, but I think the best thing that came out of Walmart during the quarter, or the best news for Walmart stock investors, was this statement here by the CEO. So there isn't anything about this quarter or anything about this coming year that shakes our confidence about growing profit faster than sales over the term of our long-range plan. And I think that was really encouraging for Walmart stock investors who were beginning to question the entire business model, because a lot of Walmart's suppliers are based outside the United States, a much larger percentage in China than in any other country outside the United States. And China is being hit with the highest tariffs. And so those competitive advantages that Walmart has built over decades was coming under question from investors because this was such a strong negative force that investors thought would hurt Walmart meaningfully. But to hear the CEO say this was really encouraging because he's not seeing anything about the quarter, meaning anything about these policies that shakes their confidence about the business. They still feel very confident about the business. One of the reasons, he says, is that we're positioned to manage the cost pressure from tariffs as well as or better than anyone else. Even at the reduced levels, the higher tariffs will result in higher prices. So they are planning on raising prices, but they believe that they're in the best competitive position to deal with these changing circumstances. In fact, they think that this will lead to market share gains for Walmart in relation to its competitors, because the competitors will not have what Walmart has, which is the ability to offset and mitigate the impact of these tariffs throughout its value chain. And one example is Target. Target sources a lot of its products outside of the United States, but it's only operating in the United States in terms of sales. So it doesn't have anywhere else, right, that it sells its products into, but it manufactures a lot of their product outside. So it needs to pay the tariffs on all of its manufacturing, all of its sourcing outside of the United States. Whereas a company like Walmart, since it has international operations and it has local manufacturing, local sourcing, as well as international sourcing, it can use its sourcing from outside of the United States to sell the products outside of the United States. So anything that's being procured or manufactured outside the US, it can send a larger percentage of those products to the countries that it's operating in outside the United States, and thereby mitigating the tariffs on those sources. And then increase the manufacturing and sourcing locally and use more of the locally produced and locally sourced products to sell inside its United States locations. So it has that option that Target doesn't even have. It can't even make a choice. It can't even do that because it doesn't have those international operations in order to offset some of these impacts of tariffs. So again, competing against Target directly in the United States, Walmart's going to have a big advantage now because of that international sales base that Walmart can shift its products to and thereby absorb a lot of unit sales without exposing those units to higher tariffs, right? And so that's just one example, Walmart against Target, in where this big change will actually be if you just exclude everything else and you just say, the only question we're answering right now is, are the tariffs going to be worse for Walmart or worse for Target? Or is it going to be better for Walmart or better for Target? And the answer is the tariffs will be better for Walmart than it is for Target. In that head to head example, Walmart will likely gain market share against Target as a result of tariffs. And we saw that for a large degree in this latest quarter already, where Walmart reported sales increases in the United States and Target reported sales declines in the United States. Walmart reiterated its outlook for 2025 calendar year, whereas Target downgraded their outlook for 2025. So we're already seeing the head-to-head advantage in favor of Walmart against Target in just one very localized example of why, the tariffs are not as bad as expected, which is great news for Walmart stock investors.
Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.